Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 11, 2022. Let's talk about Take-Two Interactive, one of my favorite video gaming stock. The big news here, Take-Two bought Zynga. They had an agreement to buy Zynga for about $12 billion. The stock came down big time. I think let's take a quick look here and see if it's worth buying Take-Two Interactive here. So Take-Two bought Zynga because they wanted to go into mobile gaming. All the competitors have bought mobile gaming companies a while ago, and Take-Two wanted to make its foray into mobile gaming. I think it's a great acquisition. Let's jump in and look at a little more detail and see if it's worth buying Take-Two here. So with that, let's jump in, look at company overview, competitive landscape, review few charts, look at financial summary, and also rank many of these video gaming players here like Take-Two, Activision, Electronic Arts, Roblox, and so on and so forth. And then do a final verdict. Is it worth buying Take-Two here or should we wait? So with that, let's jump in. As you look through here, we got two companies merging with each other. We got Take-Two, a leader, and they're merging with Zynga, which has been struggling off late. And this is a great mobile gaming play here. But Zynga has been struggling since its IPO. I think Take-Two is getting a good deal here, but they're also paying up for this acquisition. So with that, now we got combined titles here. We got great titles from Take-Two, as you can see here. Grand Theft Auto, Red Dead, and we got great titles from Zynga here. Now this could be a good marriage and good merger here. So with that, this company can really be the leading company here, and this will give very good advantage for Take-Two into mobile gaming. So with that, let's jump in. So as you look through here, we got a great company, we got a great company here, Take-Two Interactive, $2 billion generated cash here. That's a very good cash position to be in. And they got solid titles, as you can see here. And companies are doing very well. But off late, it's struggling it's lagging in the market, as many of you have noticed. But I think this acquisition here can give it a very big advantage. So let's look at a few more details. As you look here, we got Take-Two Interactive. They're a market leader in the interactive entertainment solutions worldwide. They got various labels here. They got 2K, Private Division, Social Point, and various labels, as you can see here. It's an undisputed leader. And as you can see here, stock has done pretty well. As you look here, we got nice stock chart here. Has been doing great, as you can see here. Whole 2020, folks stayed at home, played mobile games, various games. So stock went up nicely here. And in 2021, stock is struggling, as you can see here. And now with this whole acquisition news, stock came down tumbling. So at this time, let's take a look and see if it's worth buying here. From an analyst perspective, as you can see here, it's a strong buy rating from analysts here. We got 9 analysts covering it with a buy rating and 3 of them having a hold rating, no sell rating. I think it's a good rating for this company here. The big news here, basically, Zynga is selling for $2.7 billion. Take-Two is buying it, and Take-Two wants to bolster its mobile gaming business here with Zynga acquisition. I think it's a very good proposition for Take-Two here. I think it's worth paying up here and go into the mobile gaming area. So with that, let's jump in. And from an analyst perspective, from an expectation here, look, we got an expectation here or a target price, 235 here, and we got a lower target price, 180, and midpoint 213. Right now, stock is much below all these price targets here. It's about $142 or so. I think that's where we have to take a look here. There is a good projection for this company going forward. Let's dig deep and see if it's worth buying. All right, so we got CEO here. Many of you might be knowing CEO is Strauss. Strauss is a very good CEO. A lot of folks love him. He talks passionately about his leadership, and also the way he's treating the employees is very good. Look, he's got 99% approval rating, which is one of the highest. I think he's doing a great job here, and I've heard him talk about his employees and his leadership style many times. He seems to be a nice leader and cares about his people. And as you can see here, he has been with the company for a long time. And many of you know he's a fitness freak. He kind of does workouts pretty regularly. That's besides the point, but he's doing great here. So with the leadership checks out here, he's got a lot of experience in the media business here. He can bring that to bear in Take-Two here. So with that, let's jump in. So let's look at the competitive landscape here. We got various companies, as many of you know here. We got Take-Two also in the mix, as you can see here. We got Take-Two right here. And from a performance perspective, I sorted this by 1 year performance. Stocks at the top here, except Roblox, which is barely new. Others have got good performance here with AVID 73 here. Scientific Games, which is not really into software too much, but 33%. But Boyd has got 33%. But look, all these video game players here making big labels, they're down here. EA down. Activision Blizzard down here, Zynga down. All these big players here, they're all down, as you can see here. Many times what happens is these players will take a pause for a couple months, maybe to a year, and then recharge and come back nicely. The main reason for these stocks to come down here, they had a huge up year in 2020, and now with the comparison, 2021 is going to be a little bit tougher because people stayed at home and played video games. Now it's a little bit different play. Folks are going to work. That's why a little bit difficult comparison from 2020. So with that, as you look through here, we got all these great companies. Let's look a little more into Take-Two here. They have a top line sales growth, as you can see here. Not great, it's a 2%, but nice gross margin, 58% here. Net margin positive company, it's making money. Look, very low price to sales ratio here, just 5. We will look into these numbers into a little more detail, but looks like company doing well. Along the same lines, even Activision Blizzard, that's also doing great. It had some issues with the harassment case and the culture of the company. They're also cleaning up off late, but company is down, as you can see here, down 29% in 1 year. And we got EA here, which is also one of the industry leader, and this company is also down for the year, 8%. And this company also has a nice top line growth, as you can see here. That's very good, and also nice gross margin. And this company, as you can see here, has got 6 as price to sales ratio, which is not too bad at all. So with that, these are the leaders here. And I also love Unity Software, which is a great software play here. These are picks and shells play. They got nice operating system, as you call it. This stock is also down for the year. This is also a good metaverse play, as many of you know. So with that, let's jump in and go into a little more details. All right, so let's look at performance over the years and see what's going on here. Keep watching here. We got Take-Two down here, right here. And Take-Two has been doing pretty much okay, as you can see here. 2016, 2017, it did great. It took a small pause in 2018, which is the year where we had a lot of inflation here. Just came down 9%, which is much better than most of the other companies, as you can see here. Did great in 2020 and also did good in 2019. 2021, it's struggling a little bit, as you can see here, taking a small pause. Through the history here, whenever it came, I was here in this row here, taking a small pause here. Through the history here, if they came down a year, normally they will make up in the subsequent year. That's why I'm not too much worried here. They should do pretty much okay as we go forward. And look, we got competitors here. We got Activision Blizzard, which is also doing okay here. They were down 28% during the inflation 2018. They are down 26% now, as you can see here in 2021. And then you got other leader here, EA, Electronic Arts. They were down 28%, but they're in 2021 they're doing pretty okay here, down just 5%. So with that, let's take a look at these companies here and see if we can at least take a look at EA here, see if it's worth buying Electronic Arts into this downturn here. All right. So now from a chart perspective, as you can look through here, you got Take-Two Interactive. Look, no surprise, huge big drop here. The shareholders did not like the deal too much because Take-Two paid a good premium to buy this company. And look, we got um, on the balance volume going down here. This typically happens during these big news events when the stock comes tumbling down. On the balance volume also drops here, which is very typical. I'm not too much worried at all. And look, in the past we had a couple drops in EA. I mean, Take-Two Interactive. It managed to come back up nicely. Look, one more drop here, one more drop. I'm not too much worried about this company. They got a strong leader and a great culture. They're going to weather through this. This is a very good buying opportunity, especially because it's a good company with the net margin positive. And then you got Activision Blizzard. This company has been dropping off late with all the scandals in the company. And now slowly it's going up, as you can see here. On the balance volume is also going higher. This is also a good buy after this huge big pullback here. And then you got EA here. It's again, as you see, a rocky company here, goes up and down nicely. At this time, EA is also a good buy here. And then you got Roblox. It's as you can see here, down big time. Even Roblox at this time, it could be okay to slowly take a look and buy slowly. Look, after dropping for a while here on the balance volume, is trying to see where to go here. It's flat to pointing up at this time. It could be okay to slowly buy some Roblox. They also have a good gaming play here. You could look at that too. They seem to be focusing mainly on the children's games, but I think they will they're also doing pretty well here. So with that, let's jump in here. We got few more players here. Look, we got SC here. It's based in Asia Pac. Stock is down big time here. I think this one is also okay to slowly start buying. It's a great player in the Asia. They have a mobile gaming platform, also e-commerce. It's a good company. And then got Unity Software. This is a good metaverse play here. Look, even though stock is dropping, look, on the balance volume is trending higher. I would say go buy Unity here. It's a great one to slowly start acquiring. It's a great play here. And then you got Boyd Gaming. This is also a good play. As you can see here, Boyd Gaming is in the channel here, trying to see where to go here. But look what's going on here. On the balance volume is going higher. This is also a good buy here. And AVID, it's a little smaller player, as you can see here, just $29 stock. This is also, as you can see here, in a tight trading channel here. But as you can scan through, we got on the balance volume going higher. This is also a good play here. So with that, let's go into more details. All right, now let's look at a deep dive of Take-Two Interactive. And from a snapshot perspective, I will not go through this in huge detail. You can look through this in your own spare time. Look, it's a $142 stock, and IPO back in $142. IPO long time ago, back in 1997. Company's got a lot of track records. Target price is much higher than current stock price here. That's a very good target price here. And analysts are saying buy. That's also good here. Good market cap, 16 billion, no big deal. They're down big time for the year here. I mean, from 52-week high. So all checks out here. From a sales perspective, respectable sales here, $3 billion. Nice gross margin, 60%. Company making money, net margin positive. All checks out here. And as you can look through here from a growth perspective, we are expecting nice EPS growth for the next year, 39%. That tells you analysts are bullish on this company for the next year. And from an industry rank perspective, it's got a good industry rank. Among the peers, it's rated rank 3 here. That's also good. And their financials are good here, middle of the road. No big deal here. That's also good. And companies making money. I love companies with double-digit ROE and ROA. This company has got a nice double-digit return on equity and investment. And from a performance perspective, company is struggling, as you can see here, in 1 day, 5 day, 6 month, 1 year. It's been struggling. But if you look at 2 year, 5 year, it's doing great here. That's why I think it's a good long-term play. We should take advantage of this short-term drop here and buy some Take-Two Interactive. From a technical and grading perspective, look, from a Morningstar grade, it gets a B grade in health, financial health, a B grade in growth here, and a B grade in profitability. That's very good here. And Altman Z score, which tells you financial stability of the company, which is very good, financially stable. Great way to go here. So with that, let's go into some more detail and go from there. Okay, let's look at Take-Two by numbers here. As you can see here, nice earnings per share growth here, year over year, annual. That's a great clip here. Sales is also a good clip here. Sales is growing, and shares outstanding is flat. That's how I like to see it. Company doing great. And from a quarterly revenue perspective, as you can see here, it's a little bit up and down, but trend seems to be up right now here. That's good here. Overall, it's pretty good. I like to see some smooth sale here, like annual here, like annual revenue, but I think I'll take it. It's pretty much flat to up here, which is good. They're spending money on R&D. I love companies spending money on R&D. This company doing it. That's very good. They're focusing on their product development. And from a quarterly income, this is where I think it's a little bit tough for the company. The net income is a little bit lower, as you can see here. This is one of the reasons share price is not taking off. It's even became even more lower here. That's why company is struggling a little bit. End of the day, they have to focus on their product development. They have to put some more money into it. Net margin is negative right now, which is okay, which is understandable, but that's why company is taking some heat. All right, now let's look at a few numbers. We'll not go through this in great detail. Look, from a market cap perspective, it was a $13 billion back in 2019, and now it's very good $16 billion even after this drop. This huge big drop took off about $1 billion or so market cap, maybe a little more. But as you look through here, from a performance perspective, this stock is up and down for most part. Look, it went down during the COVID days, managed to go a little higher, but it's been struggling off late, as you can see here. Great entry point at this time. I would be willing to buy slowly this great company. I think they will make their foray into mobile gaming with this good acquisition. And from a sales perspective, they have respectable sales here, around $858 million in the quarter. That's a great growth number here. And as you can scan through here, sales growth is good here. They have positive sales growth, but they've been many times they've been surprising positively or negatively. So there is no consistency from a earnings, the quarterly revenue surprise. Sometimes here it's a positive surprise here, and sometimes they'll do negative surprise. Look here, it's a negative surprise. So they do negative surprise sometimes, and sometimes nice positive surprise. So that's why there is no consistency, as you can see here in the earnings or the revenue surprise here. Let's look at EPS surprise. From EPS, earnings per share surprise perspective, there is a nice consistency here. Wall Street likes earnings per share to be positive surprise. This company is giving them the positive surprise. That's why it's a stable company. They got a lot of cash, as you can see here. Nice $2 billion of cash. Came down a little slightly, but it's a good cash position. They do have some debt, which is not much at all, which is completely manageable. And as you can see here, free cash flow positive company, a very low debt on the balance sheet. That's why debt to equity is very low here. Gross margin took some hit, as you can see here, between 630 and 930. I think they should improve that. And same story with the operating margin. Net margin took some hit here. That's why stock came down, as you can see here. And ROE and ROA also, they took a little bit hit here. I think they should improve as they go forward. And from a price to sales perspective, company is still cheap here. It came down, as you can see here. So overall, I feel good about this company here. In a nutshell, company doing good job. They're struggling a little bit in the shorter term, as you can see here. But I think company will survive and do well with this acquisition. All right, let's jump through here, look at their performance over the years. So as you can see here, this year they've been lagging. In 2021 they are down 19%, but look, they've been doing great here. They did nicely, as you can see here, all these years. That's also good. They took some pause here in 2012, as you can see here, but went up again. They took a small pause in 2018. This is high inflation year, went up. So if you look at the track record of this company here, whenever they're down for a year like 2018, they followed up with a nice uptrend here. They were down here, followed up with nice uptrend. That's why this huge big drop here in 2021 and 2022, I think it's a good buying opportunity for this company by looking through its track record. And look, from a monthly performance perspective, huge big drop after this acquisition, 19% drop in January. That's a big drop here. But this company, after dropping big time here, they always come back nicely. I think their track record is good. Look, there is a big drop back in February 2020. 13% drop, and they came back up nicely here. So the history shows this company can bounce back nicely, and you can hold this company. It's not one of those one-trick pony. They can do very well. So with that, let's jump in. So from a chart perspective, this is a bigger chart, as you can see here. It's a nice 5-year weekly chart. Look, stock has done great. It's done great here all the way to 2020, and 2021 is where it's struggling a little bit. And now there's a huge big drop here after the acquisition news here. Some of the shareholders are not happy because it's paying up for Zynga. Look, it's below its almost below its 200-week moving average here. That's why I think it's a great buying opportunity, especially it's great quality stock here. The market really overreacted here. So with that, let's jump in. All right. Now let's look at a smaller chart here, a one-day chart. As you see, look at this one-day chart. Again, same theme, huge big drop after the acquisition. But typically after the earnings, stock will trade sideways a little bit. Sometimes it'll go up, sometimes go lower. But this is a huge big drop here. At this time, stock is squarely below its 200-day moving average also. And look, RSI dropping, volatility is increasing. If you're a put option seller, look, IV percentile is very high. You could sell some put option under the stock price or a put spread, make some good money here. If the stock comes down to your price, you could buy also. It's a great stock here. And from a DMI perspective, red line is going higher, blue line is going lower. That tells you this is completely bearish right now. When there is a blood in the market, go buy the stock, quality stock like Take-Two. And look, volume average is down. That tells you folks are a little bit afraid here. And check-in money flow is down, which happens all the time when the stock tanks like this. Check-in money flow indicator comes down. Overall, it's completely bearish here. That's how I like it. I've been buying this slowly. Yesterday it dropped. If it drops more, I'll be buying more as usual. And now let's jump in here and look at option chain. From an option chain perspective, stock is at $142, as you can see here. And look, stock has gone up as high as $214. And around the current stock strike price here, around 140, they got 15 open interest here from a call option open interest. And look at 190 strike price, they got 309 open interest in the contract. That tells you in the options market, folks are betting this stock will go higher. They're buying a lot of options at a higher strike price, as you can see here. And as you look through put side of the house here, there's also some put volume here, which is not too bad. As you can see here, some of them are a little high. Let's look at put call ratio here in the next slide and see if it's worth buying here. From a as you look through here, we got put call ratio is 1.6, 1.26. That tells you there are more put options traded, 24,000, and call options are a little bit less here. So historically, this tells you folks are a little more careful here and hedging their position, buying some put options, protecting them in case stock drops. Many times as a contrarian, you could take advantage of higher put call ratio and initiate a position, because if the stocks go higher, all these folks who bought the put option will lose money and stock can even go higher. That's why it's a contrarian play here. There is a lot of fear in the market, especially because stock came tumbling down yesterday. I think it's a good way to buy as a contrarian and add to your position if you already have some. So with that, let's jump in. Now let's rank Take-Two, Activision Blizzard, EA, Roblox, SEU, and a few others. As you look through here, we got a quick rank here. We will not belabor this too much. We got Take-Two at the top here, which is the company that we will be talking about. As you can scan through here, we got Take-Two, nice. All these stocks have got nice buy rating, and looks like Unity Software and Boyd has got strong buy rating. That's good to know here. And as you scan through from a revenue perspective, all these companies have got respectable revenue here. Nice, nice revenue as you can see here. AVID is a smaller player with a smaller stock price as you can see here, but it's also doing pretty well. And from a net margin perspective, Take-Two is positive net margin. That's also good to know here. Even Activision Blizzard, EA, all net margin. Roblox is struggling a little bit. That's why stock market right now does not like negative net margin companies like Roblox, like SE, even Unity for that matter. That's why they're struggling a little bit. And from a valuation perspective, very low valuation for Take-Two. And Activision Blizzard and EA, whereas Roblox is high valuation. That's why it's struggling, along with SC as well as Unity. They also have higher valuation. That's why you got to be careful with the high valuation names at the present time. And from a growth perspective, there is a respectable growth for next year for earnings per share as well as sales for Take-Two Interactive. And same story with both Activision Blizzard as well as EA as well as Roblox, as you can see here. And many of these names have got nice projection for next year. That's always good to know. And from a return perspective, this year, all these gaming players are struggling. As you can see here, 1 year return is negative for most part, with the exception of Boyd Gaming and AVID. They have done very nicely in 1 year. As you look through here, most of these companies are below their 200-day moving average squarely. That's the time you can slowly buy these quality companies. And few companies like Unity and Boyd, they're doing pretty okay. They're above their 200-day moving average. Now, finally, from a rating perspective, from a financial health, we get grade B for Take-Two. Activision also gets grade B. EA gets grade A here. EA is solid from a financial position perspective, as you can see here. And we got Unity Software also gets a B grade in the financials, and others get a C grade. And from a growth perspective, look, Take-Two gets a B grade here. That's a good grade in the growth here. They're a growing company. And SC gets a A grade here, even though valuation is a little high. And then profitability perspective, look, Take-Two has a good profitability grade B here from Morningstar. That's a good one here. Now, from an overall rank perspective, Activision gets, actually Boyd gets the highest rank here, 98. I think it's a very good rating here. Very solid company, as you can see here. And the next highest goes to Activision Blizzard with the 84 overall rating here. I think that's also a solid player. And then we got your Take-Two Interactive, a respectable 82 overall rating. That's a good rating here for this solid company, which is acquiring to grow into mobile area. And then you got EA, which is also one of my favorite, 76 rating, which is also solid play here. The others are struggling a little bit. We got Roblox, newer company, just 5 rating here, which is not so great, as you can see here. That's why stock is struggling big time. As you see here, it's a negative net margin company and a high valuation. And then you got others here. AVID gets a 53, which is not too bad. And Unity Software gets a 20. It's a newer company. I think it's a good one to slowly buy into, even though rating is a little bit less at this time. So with that, let's jump in and look at what should we do here. As you scan through here, we got Take-Two lost 13% in 1 day after this acquisition. Folks are worried that it paid a high price for Zynga here. That's why stock came down big time. And look, all these competitors of Take-Two, they made big mobile acquisitions in a couple of years, but Take-Two is a little bit late to the game to do some mobile acquisition. I think it is a good price here, even though it paid up. It's a good way to get into mobile gaming here. It's a good deal. And CEO Strauss is telling the analysts there are several opportunities. Look, one of them is to go into mobile platforms here. They got great labels in Take-Two. They can put them on the mobile platform with the technology of Zynga here and go aggressively into mobile. And they can also provide this free to play type mobile games in the emerging markets and catch emerging market leadership. And finally, we got synergy here. They can save 100 million annual costs, from this combined company. That's also a good one. Improvement to bottom line. So, in a nutshell, stock is oversold. It's a great quality company. I love the leadership. Mr. Strauss is a great guy, a great leader, cares about his people. I think with this acquisition, they will cement their leadership in the mobile area as we go forward. Great company. I would recommend buying this company. I'm personally buying this company in this dip and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.